Hello and welcome to our free online class about buying your first home. This class is designed to answer the most frequently asked questions about homeownership and help you to prepare to make the transition from renter to homeowner. The two biggest questions that are on most people's mind are: how much money do I need to put down? And what type of credit score do I need to have? Since those are the two most common questions, let's go ahead and get those answered. Let's start with how much money do I need to put down? The answer is anywhere from $0 to 20% of the purchase price. Allow me to explain. The easiest loan to qualify for is going to be an FHA loan, which is going to require a 3.5% down payment. So, if you're considering a $150,000 home, then you would need to be financially invested for $5,250. The good news is the money does not necessarily have to come directly from you. If you do not have a minimum of 3.5% saved up, then there are a few options you have available to you. FHA allows the 3.5% to come from a gift from a family member or employer. And some states have specific programs that will grant or allow you to borrow the required 3.5% that you need. Make sure to book a call with the person that sent you this video to ask about your individual state's programs. Additionally, there are 100% loan programs like USDA and VA which will provide 100% of the loan, so you wouldn't need any down payment at all. USDA loans are typically reserved for rural areas, but lately they have been expanding qualifying counties. VA loans are reserved for currently active or previous armed service members. If you're curious if the area you're considering is available for USDA or you are a currently active or previous service member, make sure you ask about a VA or USDA loan when you book your call. The second question is about credit scores. Let me start by saying that, in the overall picture, your credit score is not as important as your income. If you have enough income, we have ways we can get your credit scores up. Yes, you do have to have a minimum score to qualify. Don't be overly concerned about that. We have helped people go from 550 scores to over 640 in just a few months. The most important thing is that you have enough joint income to support the payment. We can help you get your scores up if necessary. Just book a call and we'll walk you through it. That being said, contrary to popular belief, FHA does not have a minimum credit score requirement. But, the individual lenders do. Studies have shown that the more money someone has invested in the home, and the lower their DTI, which stand for debt-to-income ratio, the least chance that they will default on their loan. Depending on current market and economic conditions, lenders typically yo-yo from requiring a 580 credit score all the way up to 660 in order to qualify for an FHA loan. Now, I know what you must be thinking. You just said that FHA does not have a minimum credit score requirement, now you're saying that I may need a 580 to 660 credit score. Doesn't that contradict itself? Yes, it does, but allow me to explain. FHA insures lenders against losses if they are forced to foreclose on house. Lenders are not in the real estate business. They are in the loan business. But if someone defaults on their payments, then they have no choice but to gain control and put the house on the market. Studies show that by the time a lender goes through all the legal proceedings to do that, they are going to lose 20% of the home's value. So, if they gave a borrower $150,000 for a house, by the time they sell it, they are going to end up with about $120,000, which is only 80% of the value. They had to pay attorney fees, pay realtor commissions, clean the place up, and do repairs. I think you get my point. Because of this, when getting any FHA loan, the lenders are going to require that you also obtain PMI insurance. This is otherwise known as private mortgage insurance. This extra payment is tacked onto your mortgage payment, along with your taxes and insurance, which your loan officer will explain to you. FHA then uses these PMI payments to help offset any losses a lender may have by giving a loan to someone who goes into default. Regardless, lenders do not like going through this process, so each lender has their own overlays. Overlays are additional criteria that a lender may have, that you must also meet, in order for them to feel comfortable loaning you the money. As a general rule of thumb, the higher the credit score, the less overlays. While a 580 score may require 3 months reserves in the bank and no late payments, a 660 score may have looser requirements. That being said, you need to book a call in order to get connected to our preferred lenders. This way you can find out for yourself what criteria you have to meet in order to fully qualify. You want to do this first, so you have time to get anything taken care of that you may not be aware is showing on your credit report. So, let's recap so far. If you're looking at a home that qualifies for USDA or you qualify for a VA loan, you can get into a home with zero money down. Otherwise, you need 3.5% of the purchase price, which can either be your own funds, or gifted to you from a family member or employer. Additionally, there are state-specific programs available that you may qualify for, that will either grant or loan you the 3.5% needed. At the end of this video, you want to book a call in order to find out which programs you would qualify for. Next, let's talk about the roles of a few people who will be helping you through the home buying process. These are your realtor, your mortgage loan officer, your appraiser, and your home inspector. I am going to explain the role of each one to you so you have the proper expectations. Let's start with the most important person, apart from yourself, in this transaction: your realtor. Now, there is a difference between choosing to work with any old agent or a realtor that has been MDA certified. A MDA certified agent has your best interest in mind. There are several pieces of the puzzle that has to go together, in order to help you find the perfect home and make it to the closing table. On the surface it may appear that an agent simply drives around, open houses and writes contracts. But the reality is, that this misconception couldn't be further from the truth. The agent that provided you this video has been thoroughly trained, and holds the MDA certification. They will take the absolute best care of you, with only one goal in mind: a smooth, stress-free process. Here's a sneak peek of just some of the duties our agents do for clients. We are here to help you from the very first conversation, until you get to the closing table. 1. Based upon your criteria, they will evaluate the market and develop a list of potential properties that you may be interested in. Making sure they listened during your initial meeting and only sending you the homes that most fits what you are looking for. Sometimes this requires several hours to narrow down the right property for you, saving you hundreds of hours searching online. 2. When you find the house you want to place an offer on, they will negotiate your offer with the seller. Your agent will discuss with you the best strategy when submitting an offer. In addition to your down payment, there are closing costs that need to be considered. If at all possible, our agents will negotiate for the seller to pay some or even all those closing costs for you. It's important to know that closing costs are real money coming from the seller. So every dollar you may get in closing costs should be considered as a dollar off the house. Be prepared that when the market is competitive, the seller may only be willing to pay closing costs with a full price offer. Offering less than the home is worth, and asking for closing costs on top of that will generally result in your offer being declined and the seller choosing another buyer. Depending on market conditions, how long the home has been on the market, and how well it is priced to what it is really worth, will determine the advice you will get from the agent you choose to work with. Working with a qualified agent, that has your best interest in mind, will help you structure an offer that best represents your current situation and desire to win the bid. Once the home is under contract, your agent will then make sure a few things get accomplished. 1. That every I and every T is crossed to protect you during the contract period. That way the seller can't try to get slick and sell the house from underneath you. Believe it or not, that does happen. 2. Make sure a termite and home inspection has been ordered to protect you if there is unseen property damage. This time frame is typically referred to as the inspection period, which means you have a negotiated number of days to have qualified professionals inspect the home for potential money traps. The home inspector is going to crawl through every nook and cranny of the home, and alert you with any and everything that you should be aware of. As a general rule of thumb, there's always going to be minor neglected maintenance issues that will be on the final report. Don't let that freak you out when you get the report. To protect you, your agent will review the inspection report together with you. You can then make a request for the seller to fix or replace anything that is of concern to you. If the seller is paying some or all your closing costs, keep that in mind when making your request because you are already receiving a substantiable concession. However, it is very customary to request for the seller to fix or replace any issues that concern safety, electrical, or plumbing. The pest inspector is going to examine the home for signs of a previous or active termite infestation. If something is discovered, then most likely that will have to be fixed. Not only for your peace of mind, but because the lender is going to require it. After the inspections have been completed and negotiated with the seller, then it's time for the next important person on your team to step in, your mortgage lender. During this phase, the lender is going to have an appraisal ordered for the property. The home is their collateral and they are looking to protect two things. 1. Their investment. 2. Your purchase price. Just like you don't want to spend more than the home is really worth, the lender doesn't want to lend more than it's worth either. The appraiser is going to make a determination, on behalf of the bank, on the home's value. They will typically base this upon comparable properties that have sold within a 2-mile radius, typically within the past 12 months. While the appraisal has been ordered, your loan officer is going to request documentation and then submit your file to an underwriter. The underwriter has the final say on loan approvals, not the loan officer. Depending on how much experience your loan officer has, will determine how smoothly your transaction will be throughout the underwriting process. Experienced loan officers know what the underwriter is going to want to see based upon previous experience. That's why it's important that you choose a loan officer that is experienced. Working with an inexperienced loan officer is the reason you may have heard horror stories about loans being denied just a couple days before closing. If you have not been pre-qualified yet, when you book your call to speak with a MDA agent, let him or her know that you would like to be connected to a preferred trusted lender to avoid any issues. So far, we have talked about the different types of loan programs available and what services a MDA agent will perform to help you have a smooth, trouble-free transaction. Next, we would like to talk a little more deeper about using the internet to find your perfect home. You should avoid using consumer sites like Zillow and Realtor.com during your home search, because that data is often outdated. Each area has their own MLS, which stands for Multiple Listing Service, which feeds into the major sites like Zillow and Realtor.com, but often with as much as a 3 to 4 day delay. What does that mean for you? It means that if you find a home on Zillow or Realtor.com, there's a strong chance that the home is already under contract. In most areas of the country, the market moves so rapidly that you want to be instantly notified the second a new home is listed to give you the upper advantage. We call this our VIP Home Buyer Program, and it's a free service our MDA agents provide. MDA agents work for you, not the seller. MDA agents are only financially compensated if they successfully complete their assignment. This includes helping you find the perfect house, and navigating through the inspection period. After booking your call, if the agent feels he or she can help you, an offer will be extended to be a VIP home buyer, and it won't take a single penny out of your pocket. You never pay them a dime, their compensation comes directly from the seller if a successful contract is negotiated and finally closed. MDA agents do not overextend themselves, they make sure they are available to put personal attention into helping clients find the perfect home and fully understand the home buying process. If you are watching this video, that means the agent that introduced this video does not currently have a waiting list and is willing and able to help you become a homeowner. The next step in the process is to book a call with the person that introduced you to this video by clicking the link or button above or below this video. Let him or her know that you are ready to become a homeowner and want to be placed on the VIP Home Buyer Program. MDA agents have been thoroughly trained, and know exactly what to do in order to make your dreams become a reality. So, go ahead and book a call to get the process started. You will be glad that you did.